Based on the historical data and forecast, Bitcoin has shown a downtrend from July 21, 2025, to August 3, 2025, with a recent dip in RSI values, reaching a low of 40.5 on August 3, 2025. The forecast for the subsequent week indicates a period of consolidation around $114,700 to $113,800, with the Bollinger Band showing a narrowing trend, suggesting decreasing volatility. Given the oversold RSI reading and the support price at $105,500, I recommend a long position with an entry price of $113,300. Set a stop loss at $112,600 to mitigate potential losses if the downtrend continues. A target price of $114,800 can be set, aligning with the upper end of the forecast range and the recent resistance levels. To refine this strategy, I propose a portfolio combining three approaches. Firstly, the RSI strategy triggers a buy when RSI falls below 40, selling when it reaches 80. Secondly, the Bollinger Band strategy suggests buying when the price touches the lower band and selling when it touches the upper band. Thirdly, the support and resistance strategy involves buying near the support price and selling near the resistance price. Combining these, we enter a long position at $113,300, coinciding with the lower Bollinger Band and a relatively low RSI. The stop loss is set at $112,600, just below the support price. The target price is $114,800, near the upper Bollinger Band and within the forecast range, offering a reasonable profit margin. This combined strategy leverages multiple technical indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Ethereum has shown significant volatility, with recent price fluctuations. The RSI indicates an overbought condition for most of the period, currently at 87.4, suggesting a potential pullback. The Bollinger Bands show that the price is near the upper band, further supporting the possibility of a correction. Considering the forecast for the next week, the price is expected to decline, with a forecast range of $3,390 to $3,620. Therefore, I recommend a short selling strategy. Entry price will be $3,620, with a stop loss placed at $3,800, just above the recent resistance level, and a target price of $3,430, aligning with the forecast price. To maximize returns, I suggest a tiered approach. Initially, short sell at $3,620 with a stop loss at $3,800 and a target of $3,430. If the price hits the $3,430 target, consider covering the position and initiating another short position if the RSI remains above 70 and the price touches the upper Bollinger Band again. This approach allows us to capitalize on potential downward movements while mitigating risk with well-defined stop-loss levels. The support price of $2,510 can be considered as a second target price for a more conservative strategy. Based on the historical data and forecast, XRP has shown significant volatility with a recent downtrend. The RSI has fluctuated considerably, reaching overbought levels above 80 and oversold levels below 20. Currently, the RSI is at 49.1, indicating a neutral position. The Bollinger Bands show that the price is approaching the lower band, suggesting a potential bounce. Considering these factors, I recommend a contrarian strategy focusing on short-term gains. We will implement a combined RSI and Bollinger Band strategy. Our entry price will be $2.93, coinciding with the forecast price on August 9, 2025, and the lower Bollinger Band. The stop loss will be set at $2.79, aligning with the established support level, to limit potential losses. The initial target price will be $3.12, based on the forecast price on August 8, 2025. If the price reaches this target, we will move the stop loss to the entry price of $2.93 to secure profits and potentially ride further upward momentum. This strategy aims to capitalize on short-term bounces while mitigating risk with clearly defined stop-loss levels. Based on the historical data and forecast, BNB shows a recent downtrend with a forecast indicating continued downward pressure. The RSI consistently above 80 for a period suggests overbought conditions, further supporting a potential pullback. The Bollinger Bands also show that the price is approaching the upper band, reinforcing the likelihood of a correction. Therefore, I recommend a short selling strategy. We will initiate a short position at $766. The stop loss will be set at $783 to protect against a potential false breakout. The initial target price is $750, aiming to capitalize on the anticipated downward movement. To refine the strategy, we'll incorporate the RSI and Bollinger Band signals. If the RSI falls below 60, indicating an oversold condition, we will close the position at $750 and consider a long position. The bottom Bollinger Band acts as a further confirmation of a potential bottom. If the price touches $737, which is the support price, we will close the position and consider a long position. This layered approach allows for dynamic adjustments based on real-time market conditions, maximizing potential returns while minimizing risk. Based on the historical data and forecast, Solana exhibits a clear downtrend. The price has consistently approached the resistance level of $164 and failed to break through, while the RSI has fluctuated between overbought and oversold levels. The forecast for the next week indicates a continued decline, with prices dropping to $153. Therefore, I recommend a short selling strategy. We will initiate a short position at $161. The stop loss will be set at $169 to protect against a potential upward reversal. The initial target price is $153, aligning with the forecast. To refine this strategy, we will incorporate the Bollinger Bands and RSI indicators. The price is currently near the upper Bollinger Band, suggesting a potential pullback. The RSI is nearing oversold territory, further reinforcing the possibility of a short-term correction. We will adjust the target price to $158 to capitalize on a potential bounce. If the price breaks below the support level of $147, we will tighten the stop loss to $162 and consider a secondary target of $156. This multi-layered approach balances risk and reward, optimizing for high returns in a declining market. Based on the historical data and forecast, TRON exhibits an overall upward trend, supported by consistently breaching the 0.322 support level and approaching the 0.338 resistance. The RSI values hover between 59 and 76, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening recently, suggesting increased volatility and potential for price movement. Considering this, I recommend a long position strategy. We will use the RSI strategy as the primary approach. When the RSI falls below 20, we will enter a long position. However, the RSI has not fallen below 20 in the past 2 weeks. Therefore, we will wait for the RSI to fall below 20 before entering a long position. Given the forecast data indicates a continued upward trajectory, we will implement a tiered entry, stop loss, and target strategy. Entry price will be $0.329. Stop loss will be set slightly below the support level at $0.32. The initial target price will be the resistance level at $0.338. If the price reaches this target, we will move the stop loss to the entry price of $0.329 and set a second target price at $0.337. This strategy aims to capitalize on the anticipated upward momentum while mitigating risk through strategic stop loss placements. Based on the historical data and forecast, Dogecoin demonstrates a declining trend, particularly evident in the recent RSI values fluctuating between 38.8 and 42.5, indicating oversold conditions. The forecast for the next week predicts continued downward pressure, with prices ranging from $0.22 to $0.205. Considering these factors, I recommend a contrarian strategy focusing on short-term bounces. We will initiate a short position at $0.22, anticipating a temporary rebound before the overall downtrend resumes. The stop loss will be set at $0.21 to protect against a sudden price surge, and the target price will be $0.205, aiming to capitalize on the predicted downward movement. To refine this strategy, we'll incorporate the Bollinger Bands. The price consistently trades near the upper band, suggesting potential for a pullback towards the middle band. We will combine this with the RSI, aiming to enter when RSI is oversold, below 20. Given the current RSI values and the forecast, the most efficient portfolio involves a short position at $0.22, with a stop loss at $0.21 and a target price of $0.205. This approach balances the predicted downward trend with the potential for short-term volatility, maximizing potential returns while minimizing risk. Based on the historical data and forecast, Cardano shows a downtrend from July 21, 2025, to August 10, 2025. The RSI indicates that the asset is currently in the overbought territory, with a value of 82.0 on July 21, 2025, and decreasing to 46.0 on August 3, 2025. The Bollinger Bands also confirm this trend, with the price consistently near the upper band, suggesting a potential pullback. Considering these factors, I recommend a short position. Entry price should be $0.777, with a stop loss placed at $0.745 to protect against unexpected upward movements. The initial target price is $0.736, aiming to capitalize on the anticipated downward trend. To optimize the strategy, we'll incorporate a dynamic target adjustment based on the RSI. If the RSI falls below 30, indicating a strong oversold condition, we will adjust the target price to $0.7, aligning with the established support level. Conversely, if the price hits $0.736 and the RSI moves towards the overbought territory, above 70, we will consider closing the position to secure profits. This adaptive approach combines the Bollinger Band's trend confirmation with the RSI's momentum signals, creating a robust strategy for high returns in the current market conditions. Based on the historical data and forecast, Stellar demonstrates a clear downtrend despite recent minor recoveries. The RSI consistently fluctuates between 43 and 73, indicating neither strong oversold nor overbought conditions. The Bollinger Bands show that the price is currently near the lower band, suggesting potential for further decline. Considering these factors, I propose a short position strategy. Entry price will be $0.419 with a stop loss placed just above the upper Bollinger Band at $0.502. The initial target price will be the support level at $0.368. To refine this strategy, I will incorporate RSI signals. When the RSI dips below 20, it indicates a strong oversold condition, signaling a potential rebound. However, given the prevailing downtrend, I will only consider a partial covering of the short position at $0.399 if the RSI reaches 20. If the price reaches the initial target of $0.368, I will set a trailing stop loss at $0.372 to lock in profits and protect against a potential reversal. This combined approach leverages both trend analysis and momentum indicators for optimized risk-reward management. Based on the historical data and forecast, Sui shows a downtrend. The RSI consistently fluctuating between 42.4 and 69.5 suggests periods of both overbought and oversold conditions, but overall leaning towards a bearish momentum. The Bollinger Bands indicate increasing volatility, with the price frequently touching the upper band and then declining. Considering the forecast for the next week, the price is expected to continue its downward trajectory, ranging from $3.68 to $3.44. Therefore, I recommend a short selling strategy. The entry price for this short position should be $3.68, coinciding with the initial forecast price. A stop loss should be set at $3.76, just above the recent resistance level and the upper Bollinger Band, to limit potential losses if the price unexpectedly rises. The target price is $3.34, aligning with the recent low and providing a reasonable profit margin. This strategy combines technical indicators and forecast data to capitalize on the anticipated downward trend of Sui, while incorporating risk management through defined stop loss and target levels. Based on the historical data and forecast, XRP has shown significant volatility with a recent downtrend. The RSI has fluctuated considerably, reaching overbought levels above 80 and oversold levels below 20. Currently, the RSI is at 49.1, indicating a neutral position. The Bollinger Bands show that the price is approaching the lower band, suggesting a potential bounce. Considering these factors, I recommend a contrarian strategy focusing on short-term gains. We will implement a combined RSI and Bollinger Band strategy. Our entry price will be $2.93, coinciding with the forecast price on August 9, 2025, and the lower Bollinger Band. The stop loss will be set at $2.79, aligning with the established support level, to limit potential losses. The initial target price will be $3.12, based on the forecast price on August 8, 2025. If the price reaches this target, we will move the stop loss to the entry price of $2.93 to secure profits and potentially ride further upward momentum. This strategy aims to capitalize on short-term bounces while mitigating risk with clearly defined stop-loss levels. Based on the historical data and forecast, Pendle exhibits a downtrend with significant volatility. The RSI consistently dips below 60, indicating weakening momentum, and the forecast suggests further decline. The support price of $3.73 provides a crucial floor, while the resistance at $4.23 has repeatedly capped upward movement. Considering these factors, I propose a short selling strategy. We will enter a short position at $4.13, placing a stop loss at $4.35 to protect against unexpected upward spikes. Our initial target price is $3.86, aiming to capitalize on the anticipated downward trend. To refine this strategy, we'll incorporate the Bollinger Bands. When the price touches the upper band, it signals potential overbought conditions and a possible reversal. Given the forecast price of $3.82 and the RSI nearing oversold territory, we can adjust our target price to $3.73, aligning with the established support level. This adjusted strategy offers a more conservative approach, mitigating risk while still aiming for substantial returns. The stop loss remains at $4.35 to safeguard against adverse price movements, ensuring a prudent and potentially profitable investment. Based on the historical data and forecast, Injective exhibits a clear downtrend. The price has been consistently declining from July 21, 2025, to August 3, 2025, and the forecast for the subsequent week indicates further downward movement. The RSI values have generally been below 80, suggesting the asset is not significantly overbought, but the recent drop to below 50 indicates a weakening momentum. The Bollinger Bands also support this view, as the price has been trending below the middle band. Therefore, I recommend a short selling strategy. Enter a short position at $13.5. Set a stop loss at $12.2, just above the support level, to limit potential losses. The initial target price should be $12.8, aligning with the forecast price for August 7, 2025. To refine this strategy, we can incorporate the RSI and Bollinger Bands as additional signals. If the RSI falls below 30, indicating an oversold condition, consider covering the short position early at $12.5. Conversely, if the price touches the upper Bollinger Band, which is unlikely given the downtrend, it could signal a potential short-term reversal, prompting a stop-loss adjustment to $13.1. This combined approach, prioritizing the overall downtrend with RSI and Bollinger Band confirmations, will maximize potential returns while minimizing risk. The final target price would be $12.5. Based on the historical data and forecast, Jupiter shows a downtrend. The RSI consistently dips below 80, indicating it is not overbought, but the recent values around 40 suggest a potential for a bounce. The Bollinger Bands show a narrowing, which often precedes a significant price movement. Considering the support price of $0.465 and the forecast prices consistently below $0.5, a short position appears to be the most prudent strategy. I recommend entering a short position at $0.47, placing a stop-loss order at $0.485 to protect against a sudden reversal, and setting a target price of $0.43, aiming to capitalize on the anticipated downward trend. To refine this strategy, we will incorporate RSI and Bollinger Band signals. If the RSI falls below 30, indicating an oversold condition, we will hold the short position. If the price touches the lower band of the Bollinger Bands, we will consider tightening the stop-loss to $0.465. Conversely, if the RSI rises above 60 and the price approaches the upper band, we will consider partially closing the position and adjusting the target price to $0.44. This adaptive approach allows us to react to changing market conditions and maximize returns while minimizing risk. Based on the historical data and forecast, Algorand shows a downtrend with increasing volatility. The RSI has been fluctuating but recently dipped below 50, indicating weakening momentum. The Bollinger Bands are widening, suggesting increased price volatility. The support price is consistently at $0.228, while the resistance is at $0.285. Considering these factors, I recommend a contrarian strategy focusing on short-term bounces. We will initiate a long position when the RSI reaches an oversold level below 20, anticipating a short-term rebound. Specifically, when the price reaches $0.242, the RSI is 47.8, and the Bollinger Bands are widening, we will enter a long position at $0.242. Our stop loss will be set just below the support level at $0.228 to protect against further downside. The initial target price will be the resistance level at $0.285, aiming for a quick profit. If the price reaches $0.285, we will move the stop loss to break even at $0.242 to secure the gains and potentially ride the trend further if momentum shifts. This strategy combines RSI oversold signals with Bollinger Bands volatility and support/resistance levels for a balanced approach. Based on the historical data and forecast, Ether.fi shows a declining trend. The price has consistently moved below the center of the Bollinger Bands, indicating bearish momentum. The RSI readings have mostly been below 50, further confirming the downtrend. The forecast for the next week predicts a continued decline, with prices potentially reaching $0.918. Considering these factors, I recommend a short selling strategy. Entry price will be $1.07. The stop loss will be set at $1.12, just above the recent resistance level, to limit potential losses if the price unexpectedly reverses. The initial target price is $0.942, aligning with the forecast low for the week. To enhance the strategy, I will incorporate RSI signals. If the RSI falls below 30, indicating an oversold condition, I will consider covering the short position or scaling back the position size. Conversely, if the RSI reaches 80, suggesting an overbought condition, I will consider exiting the short position. The portfolio will primarily focus on the short selling strategy, but with adjustments based on RSI signals. This approach balances the bearish trend with the potential for short-term price fluctuations, optimizing for high returns while managing risk. Based on the historical data and forecast, Hedera has shown volatility with a recent upward trend, bouncing between a support of $0.231 and a resistance of $0.28. The RSI indicates overbought conditions in the recent past, fluctuating above 70, but has cooled down to around 50. Considering the forecast for the next week, the price is expected to remain relatively stable, with a slight downward pressure. Therefore, I propose a cautious, short-term strategy focusing on potential pullbacks. We will initiate a long position at $0.256, capitalizing on a potential bounce from the lower Bollinger Band. A stop loss will be set at $0.231, right at the support level, to limit potential losses. The target price will be $0.262, aligning with the forecast for August 8, 2025, and a reasonable profit target within the current trading range. To refine the strategy, we'll incorporate the RSI. If the RSI dips below 50 and remains below it for 2 consecutive days, we will hold the position. If the RSI rises above 70, we will take profit at $0.262. This combined approach leverages both Bollinger Bands and RSI to optimize entry and exit points. The portfolio will allocate 60% of capital to this Hedera strategy, with the remaining 40% reserved for other opportunities, ensuring diversification and risk management. This strategy aims for consistent, moderate gains by exploiting short-term price fluctuations within a defined risk-reward framework. Based on the historical data and forecast, Stellar demonstrates a clear downtrend despite recent minor recoveries. The RSI consistently fluctuates between 43 and 73, indicating neither strong oversold nor overbought conditions. The Bollinger Bands show that the price is currently near the lower band, suggesting potential for further decline. Considering these factors, I propose a short position strategy. Entry price will be $0.419 with a stop loss placed just above the upper Bollinger Band at $0.502. The initial target price will be the support level at $0.368. To refine this strategy, I will incorporate RSI signals. When the RSI dips below 20, it indicates a strong oversold condition, signaling a potential rebound. However, given the prevailing downtrend, I will only consider a partial covering of the short position at $0.399 if the RSI reaches 20. If the price reaches the initial target of $0.368, I will set a trailing stop loss at $0.372 to lock in profits and protect against a potential reversal. This combined approach leverages both trend analysis and momentum indicators for optimized risk-reward management. Based on the historical data and forecast, Ethena shows a generally upward trend, although with significant volatility. The RSI has been consistently above 70 for much of the period, indicating overbought conditions, but has recently started to decrease. The Bollinger Bands have widened, suggesting increased price fluctuation. Considering the current RSI of 61.6 and the forecast prices, a long position is recommended with a focus on short-term gains. We will enter a long position at $0.606. A stop-loss order will be placed at $0.571 to mitigate potential losses if the price reverses. The initial target price will be $0.653, aligning with the forecast high for the week and a potential breakout above recent resistance. To refine this strategy, we will incorporate the Bollinger Bands. If the price touches the lower band, it signals a potential buying opportunity. However, given the current RSI and forecast, we will maintain our initial long position. We will adjust the target price to $0.623 if the price shows signs of consolidating near the upper band, as indicated by the forecast. This dynamic approach allows us to capitalize on short-term price movements while managing risk effectively. The portfolio will prioritize this long position, allocating 70% of capital, with the remaining 30% held in reserve for potential adjustments or alternative opportunities. Based on the historical data and forecast, Conflux has shown a generally upward trend, although with significant volatility. The RSI has fluctuated considerably, recently reaching overbought territory, above 80, on several days, suggesting a potential pullback is possible. The Bollinger Bands have been widening, indicating increased volatility, and the price has frequently touched or crossed the upper band, further supporting the possibility of a correction. Considering these factors, I recommend a strategy that combines elements of trend following and mean reversion. We will initiate a short position at $0.23, anticipating a pullback towards the support level of $0.195. The stop loss will be set at $0.235 to protect against a continued upward surge, and the target price is $0.195. To refine the strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI drops below 30, signaling an oversold condition, we will cover the short position, regardless of the price. Conversely, if the price breaks above the upper Bollinger Band and the RSI remains above 80, we will exit the short position and consider a long position. For the initial short position, the entry price is $0.23, the stop loss is $0.235, and the target price is $0.195. This approach aims to capitalize on potential short-term corrections while mitigating risk through strategic stop-loss and RSI-based exit points.